Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Thursday, August 28th. We have got a great show planned for you today. We are talking robotaxis and autonomous vehicles with the co-founder of one of the companies that Uber is leaning on to expand into that space. We've also got a great story for you about Google's AdTech business. But I want to start with the earnings that are moving markets today. NVIDIA put out its second quarter results last night. There was a lot to it between the guidance, the state of its China business, and even some disclosures about its cloud business. I want to bring on three people to help us make sense of all of that. Doug O'Laughlin is the president at SemiAnalysis. Anissa Gardizy covers the cloud here at The Information. And Jay Goldberg is an analyst covering NVIDIA at Seaport Research Partners. Welcome to the three of you. It is great to have you here. Jay, I want to start with you. You put out this really interesting report last night, and I'm just going to quote from it because it really sums it up. You said, NVIDIA's results increasingly depend on sales of complete systems, entire racks, and sometimes entire data centers of NVIDIA-configured systems. This holds appeal for some customers, but is anathema to many others, especially the hyperscalers. This was a really interesting point that we hadn't thought about too much. Tell us a little bit about what you meant there.
So NVIDIA is an immensely technically capable company. They're doing incredible things. They have all this incredible innovation. And one big part of that is the way in which they are able to tie together not just a chip, and not just a server, but entire racks and then entire data centers. And Doug actually wrote a great piece about this last year where he's saying NVIDIA is basically increasing the Moore's law growth of compute, but by pulling all those other levers. So technically, it's incredible. But commercially, they really want to sell you the whole system. They want to sell you a rack. They want to sell you, a complete system with all the networking and all the cabling. And for some customers, this is a non-starter, especially the hyperscalers. They want to do it themselves. They want to be able to customize to their own needs. And I just wonder if it's getting so complicated that is creating some friction here. I know it's something that the hyperscalers are reluctant to adopt, but may not have a choice in some cases.
And to be clear, is this coming from conversations that you're having with customers, or is this just a concern that you have?
It's a little of both. Like I think my thesis, I'm fairly downbeat on NVIDIA right now. The conversations I'm having with customers about their adoption of Blackwell, the latest GPUs from NVIDIA, it's hard. It's really hard to do. Right? It takes a lot of work to configure. It's a lot of new skills for people that they're not comfortable with. And it just feels like there is a lot of friction that's slowing adoption in one way or another.
Doug, let's go to you. What do you make of Jay's thoughts here on NVIDIA trying to sell the whole system and some concerns he has with that?
Yeah, so I had a really good piece about this last year called, I can't even remember the piece, but effectively you think about it, you scale Moore's law outside of the chip into the rack. And the point of it is that it takes the least amount of power to do the computation necessary. And so by using a copper backplane, doing a scale up, having a bigger world size, they are solving the problems that AI needs to solve tomorrow, which is specifically having the biggest scale up world possible for inference. And this also helps for MOE training. I think while it's very complicated, it is the single best performant and Jensen and Colette will tell you this, on a token per watt basis, no one beats NVIDIA. Right. And even though it's very hard, I do believe that the system scale up is the future. There is definitely quite a bit of problems with scaling the GB200 backplane and the GB300 backplane. But AMD is going this way. The TPU pods are systems as well. It might be a hard problem and system to digest, but everyone can see the writing on the wall. I think it's inevitable that data center systems is going to be the next unit of compute, not just chips in a rack, but the rack itself.
So to be clear, you're saying, whereas Jay is saying this is a challenge for NVIDIA that might be dragging them down, you're saying it's hard to do, but this is what everyone's doing, and this is the way they're going to have to do it. That's the point you're making.
It's inevitable, in my opinion.
Okay, so Anissa, we've got Jay saying this is dragging the company down. We've got Doug saying this is propelling the company forward. This is the future. Where do you land on this?
Both are really good points, and I agree with both of them in different ways. I think the worry here that people might have about NVIDIA is that, even though today these are the best systems, like Jay mentioned, they're very, very challenging. And customers typically, hyperscalers typically don't want to buy everything in a data center from one company. So I do think it's also inevitable that this will cause the hyperscalers to put a lot more resources into working on their own in-house data center equipment and also quickly looking for alternatives as well.
Doug, I want to go back to you because from my view, the way I see it is this might be the way all these companies are going, but we hear all these conversations of customers saying, we are looking for alternatives to NVIDIA, right? That's why we're talking to these startup chip companies, these hyperscalers developing their own chips. And so you've got these customers looking for more variety there. Why is it that you think NVIDIA would be able to sell them increasingly on the whole system when customers are looking for more variety?
Because they're the best. I mean, that's really what it comes down to. We can talk about all this, but there really hasn't ever been a single successful accelerator startup company. Name one like that has any kind of volume. And then the custom silicon chips themselves are worse on a performance per power TCO basis, total cost of ownership. We think NVIDIA is going to continue to dominate the market. Now, I don't think we expect their level of market share dominance to continue for that same reason that you talked about. I don't think anyone is really interested in having one player have 95% of the market. Now, that's where the custom silicon projects that most of the other hyperscalers are adopting or using or already have will come into the equation. But in the long run, I wouldn't be surprised to see the market share of the industry look something like 70-30. That's oftentimes how market shares and kind of like end up. Think about the AMD versus Intel CPU of old, or even some of the transceiver markets today. Oftentimes you have one extremely dominant leader that has the best performance, and then you have a second source that is often not as performant but cheaper. That's how I view the ASIC and the ASIC programs, and I think that that's probably where it ends up. Now, to be clear, 95% to 70% is a big gap, but I do expect NVIDIA to be the leader for as far as we can see.
Jay, are you still the only analyst that you know of to have a sell rating on the stock?
Yes, I am.
Okay. And tell us about some more of the questions that you have about the company and specifically the ones that were actually bolstered from the earnings last night.
So I think my concern with NVIDIA is very much near-term cyclical. I feel like this AI, I mean, let's face it, we're in a bubble right now. I absolutely believe in the long-term power of AI and to do incredible things. We'll get robots and autonomous cars and agentic AI, but I think it's going to take longer than the market is currently pricing in. So I agree with Doug that like NVIDIA is immensely capable. They're well positioned for this. I just think that this is all getting a little long in the tooth, and it's getting harder and harder for NVIDIA to keep the momentum going. And it's going to take the broader industry a while to digest this massive wave of CapEx we're seeing.
Right.
Longer term that changes, but right now we're up against some limits.
Anissa, I want to go to an area that you've written about NVIDIA is looking to grow in, which is their cloud business. You noticed something last night in their SEC filings about how they're spending their money on cloud. Tell us about what you found.
Yeah, sure. So a lot of big tech companies will disclose in their SEC filings how much they're spending on cloud computing, which is renting chips back from big cloud providers. Even though NVIDIA sells chips, it also needs them as well. And last year, I guess it was in 2023, NVIDIA started talking about launching its own cloud business, which is where it would rent GPUs back from companies like Amazon, Microsoft, and Oracle, and then resell them to its own customers. And last year, it started mentioning in its SEC filings that part of its cloud spend on the big hyperscalers was to support this nascent cloud business. It's called DGX Cloud. And yesterday was the first time we saw that they no longer said that their cloud spend was supporting the cloud business. They went back to just saying their cloud spend supports R&D. And so that's definitely something that I'm going to be digging into. It seems like the cloud business has sort of dropped in terms of its priorities, and the majority of NVIDIA's cloud spend is, like it said, going to R&D.
Doug, how much do you pay attention to NVIDIA's cloud business?
Quite a bit, but I think you can look through the public. You can look at what they've done recently, and the answer is pretty available to you. So, for example, they recently purchased Lepton. Lepton is effectively we're going to use platform as a service, specifically as a moniker here. Platform as a service provider that kind of brings up the lower level of neoclouds, like essentially the almost like commoditized layer of infrastructure so that they can have that DGX level service by providing software to commodity infrastructure players to then sell GPUs into the market. So I think that that's what we're really seeing here. The pull away from DGX Cloud is because they recently bought Lepton to be their platform to push, it's from the top down versus the bottom up. And so it's a bottom up enablement of the neoclouds to then sell GPUs to customers.
Jay, one of the questions I had for you, we haven't talked about the China angle to the earnings last night, which was honestly, I don't know. A lot of people, they go on Twitter, they say, I control F how many times the word AI came up. I feel like we should be doing that with China and NVIDIA's earnings because it keeps coming up. They were open last night. They said, look, we haven't included China in any of our forecasts. We basically taken that business line or that region out of our estimates. And it got me thinking, if I was a CEO and there was a side of my business that had basically stalled, a lot of other CEOs might try to not draw attention to that. And here you have NVIDIA talking very openly about what's going on with the China business. Why do you think they're talking about it so much when the business doesn't even exist right now?
I think they're negotiating in public with the United States government, right? They're trying to put pressure on the government to make something happen. And they've actually been doing this for quite some time.
Right. But the problem isn't the U.S. government. I mean, the U.S. government said, we'll give you the licenses, right? I mean,
but the problem is I think they've reached an agreement with the president. But what they said on the call was that they need further documentation, and I think they sort of implied that they might even need legislation in order to get the approval, right? Because the deal they cut was very much sort of high level terms. Now somebody actually has to put it all in writing, and they're waiting for that, and that has slowed things down. And so they're trying to put public pressure on the U.S. government to get things moving.
Doug, what do you think?
I think that's correct. They're definitely negotiating in public. A lot of this, we're starting to see this happen a lot more often with the chip companies, especially with the Trump administration's deal-driven government, right? It's all about a deal.
Right.
So I think that that's probably correct. The H20 clearly has demand in China. The ecosystem is a little bit more nascent. We've written quite a bit about it here at SemiAnalysis, but we are, I think if that deal is inked, we will see some kind of China revenue. So one of the reasons why it's become such a big part of the earnings conversation specifically, I think, is because of how incremental it is to the estimates. One of the reasons why they slightly missed DC this quarter was because of H20. And the big, X factor for a slight revenue beat next quarter is the $3 billion of H20 revenue.
Right.
Or I think up to $3 billion of H20 revenue, that is possible.
But what about the China government, which is the big question here? I mean, there's national security concerns from them as well. And you still have Jensen talking about this question. I don't know if he mentioned the government China explicitly. I don't think he did on the call last night. But what do you make there about that issue that exists right now?
Banning.
Oh, sorry. Just repeat what you said.
With regards to the security of the chips and like the U.S.-China relationship, or with regards to the fact that Chinese officials and the Chinese government themselves are saying, don't use H20s. We're trying to...
The latter.
Okay. I think that's an interesting point. And I think that this is negotiation in public, because while they say that, the reality is almost all of the inference that's done in China is done on NVIDIA effectively. And so I think they would more than happily take the compute, but there is a level of you have to plausibly deny almost what you say in public versus what you do in private. So if I had to guess, they're going to say don't use it. But in reality, subsidiaries and affiliates of many Chinese companies will be purchasing H20s.
Great. Anissa, last question for you. Talk to us about what came up on the call last night with respect to sovereign AI.
Yeah, so Jensen said that sovereign AI, it's something he's talked about for a long time. It's essentially different governments across the world building their own AI supercomputers and AI data centers based on NVIDIA so that their artificial intelligence can be based and owned in the country. He said that he expects that business to generate $20 billion in revenue this year. And I think I was kind of wondering how they define sovereign AI, but that's $20 billion isn't a small number. And he's been talking about sovereign AI growing for a while. So it seems like this year he does have high expectations for the business.
Great. Well, I want to thank the three of you for coming on. We could talk for probably a lot longer about all of this fascinating perspective. Just before we go, and people listening to the podcast won't be able to see this, but I want you to give us a thumbs up, a thumbs down, or comme ci, comme ça, as they say in French, of the earnings last night. All right. So, Jay, Anissa, Doug, just give it to me.
Yawn, I guess up.
Okay.
Yeah.
All right. Well, thank you so much to the three of you for coming on. That is Doug, Anissa, and Jay, and we will be talking more about that in the days to come. Well, earlier this summer, Uber said that it would test 20,000 autonomous vehicles over the next 6 years in partnership with two other companies. The first of those was Lucid, the car company. The second was Nuro, which builds autonomous vehicle software. And on the heels of that announcement, Nuro announced a few days ago that it has raised $203 million at a $6 billion valuation. I want to bring on Dave Ferguson, the co-founder of Nuro, to talk more about robotaxis in this current moment. Dave, welcome to TITV. It's great to have you.
Thanks, Akash. Good to be here.
So when I think of self-driving cars right now, one of the questions that I think every company is asking themselves is whether a platform play is better or whether a partnership play is the future. And just to explain to listeners what I mean by that, I mean, if you look at a company like Waymo, they're offering rides through their own platform and through their own app. You've also got companies going the partnership route with Uber. Tesla has basically said they're going to run their own platform. Nuro, though, is partnering with Uber. And so I want to ask you about how you got to that decision in your mind.
For us, I think it was relatively simple. I think we wanted to focus on what we believed we could do very well. And so the partnership that we have with Uber and Lucid is very much each party doing what it does best. Lucid is going to manufacture amazing vehicles with self-driving hardware on them. Uber is going to manage them and operate them, and then obviously provide the service to customers, which it does better than anyone else in the world. And Nuro is going to provide the AV tech. And so we felt like it was a really lovely marriage of bringing together all of the strengths across partners in the ecosystem.
Right. And one thing that I've been thinking about is partnerships kind of seems to be the way Uber has struck partnerships with a lot of these companies. Do you think that Waymo, for example, will someday sort of get rid of its own app and sort of lean on partnerships more heavily?
I think everyone's honestly trying to figure out what does the future of this ecosystem look like. It is such an enormous opportunity, and the space and the industry and the TAM associated with it. So it's definitely going to have multiple very strong players. And I think each of us, including Waymo and Uber, are really trying to navigate through the next few years to figure out what makes the most sense. So you mentioned Waymo and Uber. Waymo does run its own app and does a great job of that in San Francisco, where I live. I can catch a Waymo through their own app. But then they also partner with Uber in certain cities where Waymos will be on Uber. And in other cities, Uber actually manages the fleet for them. So already we're seeing, even within the same two partners, multiple different possibilities. And I think what I personally think long-term is that we're going to converge to a state where we do have incredible experts that are focused on pieces of that puzzle. Like we'll have fleet management companies that are the best in the world at managing fleets. We'll have obviously the rideshare networks doing their part, and we'll have AV companies doing their part. But we're going to see a lot of experimentation and also figuring out how it's all going to shake out over the next few years.
What do you think of the Airbnb model that Tesla has talked a little bit about?
I think that the personal vehicle ownership of L4 vehicles, so people personally owning cars that can then go operate driverlessly for mobility services, I think it's going to be incredibly powerful, and it's going to be a massive, massive component of the future of mobility fleets. I think right now it's a little bit early, and we're seeing some promising initial testing, but I strongly believe from an AV technology perspective that we do need LiDAR to be able to do this really safely and to get the performance that you want for full driverless vehicles. And so I do think we're going to see perhaps more fully equipped vehicles in terms of sensing technology than what we have today on the Tesla fleet.
But I mean, just going back to where you started that answer, I mean, so you actually think that the Airbnb model that companies like Tesla have talked about, where people are renting out their own robotaxi or their own vehicles to be robotaxis, you actually think that's a sustainable and a smart business model?
I think long term, we're going to have mobility services like Uber that have some vehicles that are a dedicated fleet that they manage or another partner of theirs manages. And we're going to have a significant portion of their fleet be personally owned vehicles. And so Nuro as a company is very focused on licensing our tech across both of those different markets. So we're spending a lot of time with OEMs to ensure that our tech is on future versions of personally owned vehicles, because we do see that as a massive part of the market in the future.
Got it. Well, and I was going to ask you actually about this fleet management question. I was going to ask you what role you saw Nuro playing in that. And so you guys are actually working with OEMs to sort of develop those fleets. One of the questions I had for you is, take me in the future. I mean, you have these fleet management companies. What are some of the big questions around that in terms of like business model? You have to own these vehicles, right? Like, maintenance, stuff like that. What are the questions that you think are unanswered right now about fleet management?
I mean, I think we do have a couple examples of companies like this that are very successful. It's not all that dissimilar from today's rental car companies, right? It's massive CapEx. It's a lot of vehicles. You need to have depots for them. You need to maintain them, keep them nice and clean, and they need to be turned over very, very quickly. And so I think we already have a few pretty clear successful examples of industry leaders that are able to do that. I think that's what we're going to see in the future.
And I haven't paid too much attention to the rental car industry, but rental cars, to me, I mean, there are a lot of them around, but it strikes me as a really difficult business model, no?
It's tough. I mean, it's very CapEx and OpEx intensive, but there are a few businesses like that are still very strong businesses, and they're critical to the industry and what we all collectively want as future products. So I think they're going to play a very, very strong role. And we will, as in all other parts of the ecosystem, I think we'll figure out who are the best players that can do that most cost effectively and still able to make very strong margins, or at least reasonable margins to build strong businesses behind it.
Great. Last question for you, Dave. You raised all this money. What are you going to do with it in the next 18 months?
Well, we have plans over the next 18 months to launch a Robotaxi with Uber and Lucid. That's going to require quite a lot of effort.
20,000 of them, actually, yeah.
A lot of it will be going to that, but really building this technology and keeping it at sort of the highest possible bar from a safety and performance perspective requires a lot of resources. So that's where we'll be putting it. We'll be focused again on the autonomy tech and making sure that we nail that for our partners.
Great. Well, Dave, thank you so much for coming on the show. I look forward to talking to you more as this space evolves. That is Dave Ferguson, a co-founder at Nuro. Okay. Google is gearing up for a court ruling on whether or not it will need to spin off part of its AdTech business. As it waits, the company has actually been taking steps already to make that division more of a viable standalone business. That is according to a story that we published this morning in The Information. I want to bring on Cathy Perloff, who wrote that story. Cathy, welcome back to the show. It is great to have you here.
Hi, nice to see you again, Akash.
Okay, so look, I'm going to do my best to sort of give the lay of the land here on AdTech. And just for context, Cathy and I were in the newsroom this morning. We were whiteboarding out how the AdTech industry works. And first of all, the thing that people need to know is that buying ads is an auction process on the internet, okay? And the way I understand it is you've got this auction, okay? And on the buying side of that auction, you've got brands, beverage companies, for example. They have to use companies with technology to help them get the lowest possible price for those ads that they're buying. On the flip side, you've got publishers, companies like news publishers, for example, that are selling the ads. And you've got another group of companies with technology that are helping all these websites get the highest possible price for those ads. Google plays on both sides of that, okay? But the part that we are talking about today is the side that is helping websites like the New York Times, like news publishers, sell ads at the highest possible price. And you had a story today about how they're looking to change that side of the business. Talk to us about what you found.
Yes. Well, thanks for explaining that, Akash. It's funny, the Justice Department is spending so much time on this part of the market that is a little complicated for the everyday person to understand. But yes, so basically, Google internally has discussed, because of these antitrust concerns, like this business might get spun out, and how can we make it more independent? How can we make it more not dependent on the rest of the businesses that Google owns. And one thing they could do is have more relationships with brands, because that's something that the sell side, this publisher side of technology, which is being threatened to spin off, doesn't really have those relationships. So
Right. They only have relationships with the publishers, the website selling the ads.
Exactly. So they have been trying to court advertisers to forge closer relationships with them. They had a dinner in New York. It's important to know this, antitrust is one reason for this. Another reason is like this is kind of a trend in the industry, and Google is trying to kind of, honestly, because they're so big, one could say they maybe haven't had to move as quickly as some of their smaller competitors, and this has been something some of their smaller competitors have done as well. But regardless, they've been having dinners with agencies. The other thing they've been doing is trying to have more attractive roster of publishers to offer advertisers, without the sort of other stuff Google can give advertisers, like the connection with search. So they've been trying to court streamers, like streaming TV companies, also to use the service. And so my story is sort of about the efforts they've done to be more self-sufficient, and also how some of them haven't been going that well. So
So you've got Google that is starting to reach out or at least have dialogues with the brands on the buy side. There's obviously the antitrust issue here of there's a possibility that it gets forced to spin off. And so it would have to be a viable independent unit on its own in that case. My question for you is, what is the pitch that Google is making to brands? I mean, their specialty on this side of the equation has been helping websites get the highest possible prices for their advertisements. What could their pitch possibly be to the brands, saying, we'll help you get the lowest possible, right? Because, I mean, how do you play both sides at once?
Yeah, I mean, it's a good point, because I think some of the buyers I talked to that got this pitch were a little confused. Like, they're like, we already deal with your people on this other side of the business. And it felt like kind of the conversations were a bit vague. I think they're trying to say, they're actually going to planning on maybe building new technology that would specialize more with the brands that they don't have already. They can also say, look at all the great publishers we work with, and if you work more directly with us, you'll have more direct access and better buying opportunities with all the websites they work with. And it's true that they work with, most websites work with Google, like on the web. Almost all of them that sell ads. Most websites that sell ads work with Google. But in other parts of the market, like in mobile, they've been a little bit falling behind recently to AppLovin. And in streaming television, they have some big customers like Televisa, Univision. They had to deal with Disney. Roku works with them, but they're not as dominant as some other players. And their efforts to sort of get streaming companies to work with them haven't always been successful, because sometimes their technology doesn't seem suited for those companies. So if when they're going to buyers and saying, look at all this stuff you can buy from us, I think it's still I think the pitch is still being crafted, and it's not quite, they haven't quite figured it out yet.
Early days. So last question for you before we let you go. Why should we be paying attention to this? There's the antitrust side to this story, and there's the side of it that is they're already doing what could inevitably happen.
Yes.
But could anything fundamentally change about advertising on the internet with something like this?
Yeah, I mean, it could, if Google has a lot of advantages being such a big company and having this business within it. And if they were forced to spin it out, it would lead to, I mean, listen, this is the Department of Justice's argument. Google would say something differently. But, it could lead to more competition on the web. Maybe it could lead to better
ads? Like could the ads be better?
Well, I think what it would really help is publishers who make money from ads maybe get more money. And like if there was more competition, that could drive up the prices that websites get for ads. I think that's the main thing. I think that also, our audience as close watchers of the tech industry, this is one advantage Google has in the overall advertising market and just as a company. And if they had to spin this off, it might weaken them slightly. And I think it also just shows that despite how big Google is, sometimes they don't have to move as quickly as some of their smaller competitors. And even though the government has put a bullseye on them, a lot of what they're talking about is stuff they've done maybe 10 years ago. And today, other companies are starting to catch up. So
great. Well, Cathy, thank you for coming on the show. I look forward to us producing that segment together, which is AdTech 101. We were talking about getting a whiteboard on the stream and drawing everything out. We'll have to get to it, but thank you for coming on and explaining to us your reporting. That is Cathy Perloff at The Information. Well, that does it for today's show. A reminder that we are live on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I am already excited for our next show tomorrow. And so until then, bye-bye for now.